Hi, Tori Agler with McIlvaney Precious Metals and your May 2025 Precious Metals update. We have finally seen a little bit of a slowdown in the gold volatility, and the white metals are playing a little bit of a catch-up. So it's been kind of a unique month, if you will, for the precious metals. A lot of it based on economic news. The month of June, as I record this, is starting off a little hot again, and that's okay. But we did see a pretty flat month in gold in June and a little bit of a rally in platinum and palladium, especially. So I'm going to show you the screen here, and we'll get into some of the details on what that is. And here you see the gold chart. The prices here closing the month at 3,299 means we were pretty flat. And you can see from the start of May to the end of May, that's very flat. Now we have a little bit of a pop on this chart just because of the June 2nd rally. But gold was actually technically in some charts or in some trading indices down about 0.2%. And in other, like the LBMA, it was up 0.7%. So I call that a flat month. And, relative to silver, which ended up seeing a little bit of a flat month as well, but ended up 1%. So here you see the June spike in silver, disregard that. But for, again, the month of May, we ended up relatively flat, as you can tell by that blue 50-day moving average line and the green 20-day moving average line. What I do want to show you here, if we go back to gold, is at the bottom of this chart, you'll see that there's this decline. And this tells me that when we get down to the low here, this is an oversold position, right? So it means that gold has been technically oversold. When it's high, it means gold has gotten overbought. And sure enough, it coincides with the top of the charts. And then you see this decline in price, which I'll get into here in a little bit. But the oversold position means that gold is due for a little bit of a rally if the bullish fundamentals are still intact. And sure enough, that's what we're seeing so far in June. But this is a May focus. So back to silver, you'll see that on that drop in silver in April, very, very oversold. Now it's getting into a healthier position and building a bullish fundamental, but again, flat. Platinum was the fun story for May, up 9%. It's now up 16% year to date, which is actually better than silver. Silver is only up 14%, but gold is up 25.6% in 2025, so it's still leading the charge because of its monetary components. Silver, platinum, and palladium are industrial metals, and they need a little bit more of an economic resurgence to really drive them. But here you'll see that May chart is a little bit more fun, this upward trend, up about 9% on platinum and up about 2.6% on palladium. So from the start of May to the end of May, you'll see that we had a nice little palladium life breathed in as well, and platinum is winning, if you will. Now, I told you that I'd get a little bit into this trend. What we saw prior to the first trading day of June, that as we closed the month, we had this really just textbook chart of a declining channel, meaning when we hit that 3,500 mark back in April, we've only set lower highs and lower lows. So that tends to be a bearish trend, at least in the short term. Well, now, we're kind of thinking, well, this is going to come down here, but it ended up breaking north. Here's what we were predicting. And the reason being, again, I'll move this out of the way. The reason being is that we're hoping that all of these things align. So this downward channel, we're getting into June and July, which tend to be the low points for the year. It starts in May, and then it really kind of bottoms in June or July for the low price of the year. Then you see this 200-day moving average coming up as well. If that trajectory changed and we have this alignment with these Fibonacci retracement numbers, it wouldn't surprise us if we saw somewhere around 2,950 or 3,050 be a low for the summer. Again, that was just kind of negated with yesterday's price action, which was geopolitically driven due to Ukraine and Russia tensions. So who knows? We'll see what transpires. But I will tell you this, gold isn't just up against the US dollar. It's up against all major developed market currencies, right? So these are all the primary currencies around the world, and gold is up anywhere from 9.5 to 25.3% in all of these currencies. So that's a very bullish trend, because the real issue is the debt and the spending, and that's a global problem that every fiat currency, every developed nation is trying to inflate its way out of trouble that really started with the financial crisis and just hasn't had a chance to wash out. So here's a longer term chart on gold. I showed you the short term chart. This is a 5-year chart. So going back just into 2022 when this most recent cycle started, but it looks just like this going back to 2017 as well. So, I would say this is a very, very healthy bull market. As we get really zoomed in on stuff, we can get lost in the weeds or not able to see the forest for the trees. But gold is absolutely in an undeniable bull market. And unfortunately, it's really hard to tell, is gold in a bull market, or are fiat currencies and treasury markets or bond markets in a bear market, right? Because gold tends to react a lot. And again, with its monetary components, that gives you the separation here from it and silver. So this is the gold to silver ratio updated chart. We've been north of 100 for a while now. As I record, we've dipped below it to about 97. Silver had a very strong day yesterday to start June. But all that being said, we're still in this range where it screams buy silver, because this is only, well, technically the third time we've been this high. Here you'll see the all-time high spike in COVID. But, we had a 1992 spike as well, where we got north of 100. So this is a good time to buy silver. When you buy silver here, you can sell it in the future for gold, and you'll end up saving, 20% on your gold technically, because you'll end up with 20% more ounces of gold when that ratio comes down. So one of the recommendations I make is to not wait on the silver. Here's the US dollar chart, which is obviously an inverse correlation to gold. What the dollar tends to do on the dollar index, gold will do the opposite, right? So here you see a more recent rally in gold represented by a decline in the dollar, and vice versa. But we've been using this 100 level, which we're almost at today. Yesterday, we dropped below 99, so 98.9. And so we got down to the tail end of this little circle, or this bubble, just like what we've been doing the last 6 weeks. And to me, that dollar weakness is going to continue. President Trump wants a weaker dollar. This administration is trying to get the Federal Reserve to cut rates. The Federal Reserve is not cutting rates. They may not cut rates again this year, but it's looking like what was going to be 4 rate cuts has been reduced to 2 rate cuts, because there's not going to be one in June either. And so they just don't feel like they have the economic numbers that are warranting a rate cut. So the Trump administration is going to try desperately to weaken the dollar in other ways, and they're going to do that with some disincentivizing, if you will, of foreign-held U.S. assets, and try to get a weaker dollar that way, because it has a lot of trade advantages. So there I showed you the U.S. dollar index, but this is an inflation-adjusted dollar index compared to far more currencies. And here you'll see that we're at essentially in this range, the second highest range ever, compared to other currencies. So that's what the Trump administration is crying foul about, is that the stronger our dollar, the more disadvantaged we are with exporting, which means more disadvantaged with domestic production and manufacturing, that it delays the Industrial Revolution. So they want to see this dollar come down. And all that being said, this is not new for President Trump. In his first term, here's a chart on gold. And so if you think, well, gold may be topping here, and that there's going to be responsible fiscal policy, well, that wasn't the case in the first term. He's very stimulative. He's very weak dollar policy driven. He doesn't want runaway inflation, but he needs to stimulate GDP. And the problem is that they've inherited this negative situation where the debt to GDP ratio is 6.7%. Scott Bessent came out and said, look, that's worse than any time other than wartime America. And so they've got to tighten their belt. They've got to reduce the debt, reduce the deficit, but they also need to stimulate GDP. So the second half of that ratio, and that's what they're really going to try to do. And that's what they're obviously doing with the tariffs, is discouraging foreign investment and discouraging foreign manufacturing, bring it back to the United States. and give the United States manufacturers a competitive or a level playing field. So the stock market has remained somewhat, greed oriented, still this irrational exuberance. But you'll see here that the S&P 500 actually has been trailing the rest of the world significantly here as of late. So the problem is, going back here, you'll see how negative the S&P performance is, more than 10% weaker. In fact, the S&P 500 really is flat on the year, whereas a lot of other developed nations, equities markets have been very solid. So this is just a recent phenomenon here, as you'll see the end of 2024 into 2025, and that's a negative outlook for our asset values as the dollar depreciates. What is working is that here we see the U.S. customs duties hitting an all-time high. So we had about 16 billion in April in excise taxes collected as a result of tariffs, and then it popped up to about 22.3 billion in May, and that was before, that was data through May 22nd. So there is some revenue generation going on through excise taxes, and that's with, again, also a lot of the legal challenges in the courts that are actually adding to the uncertainty, which is adding to the gold price. It's putting a floor, whereas normally I think gold would be taking a breather here. It's not allowed to because of geopolitics and then the uncertainty, obviously, with the tariffs. But I feel very good about holding it there. The recession chances have reduced all the way down to 28% now. We were north of 60%. I would say I started the year, back in here, assuming that we were going to have a recession, and I felt about 75% sure of that. And I'm still going to hold out that it's still a real possibility. But with all the economic numbers coming in, Trumpageddon is not happening. There's a bunch of negative speak in the media, and they're wishing that the numbers were worse. As far as Trump allies, they're happy that they're not worse. It's the mainstream media that's trying to predict a worsening situation. So recently we had April income spike, we had CPI, or inflation, actually drop lower than they thought. It's actually a disinflationary environment, almost deflation. So that's actually positive, despite they're trying to stimulate GDP and not drive inflation. So that's really kind of it in a nutshell on just the month. I will tell you, look for a pullback in the price and add to your ounces of gold. Nothing has changed. The Federal Reserve is still watching and waiting. We'll watch and wait. We'll see what rate cuts do. We'll see what the bond yields do. But the uncertainty is really the key, as are geopolitical tensions. I would not wait to buy silver here when the ratio is this high. At least be adding to your silver ounces, but be paying yourself with money that you're making and some aside. And it really does say probably a little more silver now than gold, depending on your age. Remember that we have Golden Rule Radio every Thursday. You'll find that on our website, as well as David's McAlvany weekly commentary for that more macroeconomic approach. Consider your IRA. If you haven't moved some IRA monies into metals, definitely consider that. And then I have a website here, silvergoldinsights.com, where I've got some short videos that will help, but also our main website, McAlvany.com. That's always a key place to go. And then here you've got my email and the phone number, 866-211-8972. As always, we love working with you. Eric and Deanna and I are at your beck and call, and we just really appreciate your continued trust and business. And here's to a happy June and start of summer. Take care.